Hey, everybody, welcome to the latest edition of Legal Bites, the official podcast of Cummings and Cummings Law, where our primary focus is on assisting businesses and their owners to redomesticate out of high tax, high burden states like Washington to greener pastures. Today, I am analyzing a Tax Foundation article dated January 14th entitled Proposed Washington income tax would yield a top rate of more than 18%. This article warns that this aggressive so-called millionaires tax could devastate Washington's state economy, pushing companies and jobs to states like Florida and Texas. And I can tell you that is already happening. If you are in Seattle or Bellevue or someplace else in Washington state, this should be your wake up call to redomesticate out of the state before it is too late. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's in accounting and a master's in taxation, in addition to 11 professional licenses and certifications spanning accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, the state of Washington has long prided itself on quote unquote no income tax, although that's not quite true, relying on sales and business and occupation taxes, which in reality function quite similarly to income taxes. But I digress. Recent proposals, including a 7% capital gains tax, which was enacted in 2022, and Seattle's almost 3% payroll expense tax on large employers, have certainly changed that perspective. Now, Washington lawmakers are proposing an almost 10% tax on earnings over $1 million, yielding a combined state local top rate of over 18% on wages and get this, restricted stock units or RSUs in Seattle, the nation's highest. Split between employer and employee at about 10% and 8% respectively, it dwarfs California's 13.3% or New York's about 11%. This article highlights who gets hammered the most, and it's going to be small business owners filing as pass-throughs, where business income counts as personal, and tech workers compensated with RSUs will also be targeted. At startups like those in Seattle's ecosystem, RSUs often vest all at once upon IPO or acquisition or some other event, triggering massive one-time hits. Imagine a founder whose $50 million invested RSUs incurs almost $5 million in new taxes on top of the federal rate of 37% in some cases, potentially forcing liquidation of shares at depressed prices. For established firms like Amazon or Microsoft, it erodes talent retention as employees eye zero income tax havens like Florida and Texas. At my law firm, we have redomesticated numerous Washington entities fleeing this environment. A Seattle software startup we assisted last fall converted its LLC to a Florida LLC structure in 3 weeks, slashing effective tax rates by 18% while gaining unlimited homestead exemptions for its founders that protect primary residences from creditors up to the full value of the home, which is crucial for executives with volatile stock holdings and high profiles. I want to emphasize that this redomestication process results in zero operational or financial disruption. Business continues as usual, and the company keeps its existing federal employer identification number, bank accounts, contracts, and so forth. Similarly, in Texas, we redomesticated a Bellevue biotech company to Austin, where they enjoy no income tax at the personal level minimal tax at the business level, and specialized business courts that resolve intellectual property disputes quickly versus Washington state's 2-year backlogs. Florida's advantages are obvious and tangible. Zero state income tax saves a $10 million revenue firm almost $1 million annually against the proposed Washington rate, plus robust asset protection trusts that can shield family wealth from lawsuits, unlike Washington state. Texas matches with no income tax in many cases, lower commercial property taxes, and incentives like the Texas Enterprise Fund granting up to $10 million for job creating relocations. This fallout has a cascade effect. First, direct exodus. This report predicts job losses as firms like Boeing fragment or Zillow rethink their footprints. Second order consequences include talent drain. Seattle's tech scene is already in its death throes as engineers are relocating to Miami and Austin, where living costs are about 20% lower. Third order consequences, state budget failure, forcing hikes in Washington's already aggressively high sales tax and B&O tax, squeezing the remaining small businesses further and exacerbating this doom loop. If this new tax passes, constitutional challenges may arise. For example, Washington's constitution bans graduated income taxes per a 1933 ruling. But don't wait around for the courts. That might take years. I encourage you to consider redomesticating preemptively to reduce your state tax nexus exposure because lingering assets invite prolonged and protracted audits. If your business is still anchored in Washington state or in another business unfriendly environment like California, New York, Illinois, or Maryland, just to name a few, now is the time to consider relocating to Florida or Texas. If you have questions regarding redomesticating your existing LLC or corporation, please use the link in the description for more information on this process and to schedule time for us to speak about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation is general in nature and is not legal advice because legal advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations on this topic, of which there are quite a few, please visit my firm website at www.cummings.law to schedule time for a consultation. I look forward to the opportunity to speak with and perhaps even work with you very soon.